Hello there, Maverick traders. This is Rod Reinhold. It is Tuesday, May 27th. Hopefully everyone had a great Memorial Day weekend. Let's jump into it. In this session, we're going to talk about the news of the day. We have big news over the weekend. We had the futures up big on Monday night, and then we had the follow through this morning. So we're going to take a look at everything, and we're going to break down some trading setups in this market.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick traders receive this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
Okay, let's go ahead and start off with the news of the week. So this weekend, we got news out that the tariffs, the 50% tariffs proposed on Europe have been postponed till July 9th. So the market loved that, and the futures went up on Sunday and Monday. And so today when the market opened, we had a nice gap higher, but what happened after that gap higher is really what I want to focus on today. We also got some strong U.S. economic data for a change. We got better than expected durable goods orders, and the consumer sentiment number jumped substantially. This was the first number that started to deteriorate in February, and it got really nasty levels to where the consumer was very pessimistic about where the economy was going. People are feeling much, much better after we haven't really seen any of the negative effects that the tariffs were supposed to bring. Now, again, most of the tariffs have been delayed, so of course we're going to see that damage done to the economy delayed as well. We all know that one tweet, the tariffs could be back on. But for right now, it seems like the market is saying that the tariffs are likely going to be more off than on. That's what the market is saying right here, right now. The Dow went up 1.7%, S&P up 2%, Russell and the Qs up 2.5%. Oil and gold went down, but not all that big. And if you take a look at the market internals, we had basically 80% of all stocks went up today. That is a very, very strong day. Usually 90% is about the strongest day you get. 80% is really, really strong. Now I'm going to go to this second chart first. So this is the daily chart of the S&P. I'm going to take a look at the 5-minute chart. I just want to show you, we got the gap up. Now this gap was still substantial. That was a 1% gap higher. Take a look at this price action. If this is the first time you've heard me talk about it, this is a strong day where the bid is thick. What I mean by that is that when there's an institution that wants to buy a lot of shares, they don't go buy it at market. They put bids out. They put bids saying, okay, I want to buy, 100,000 shares, at this price. And they're not hitting market. They're not hitting the ask because they're patient. So any selling that comes into the market, it goes into this bid. And if there's hundreds of thousands of shares wanting to be bought on the bid, the market literally can't go down because by the time that all those sellers have been filled, more buyers come in. And so all that happens is you get basically bases. You can see we got a little bit of a pullback here, but remember, this is the key. At the end of the day, all of the people that wanted to get orders done, they start to hit the ask. They start to hit market, and you usually see a nice little pop at the end, which is exactly what we saw. This is telling me that the institutions are putting in orders, and they don't get their orders filled in a day. They get in over weeks of time. What we got was a nice pullback. This is a nice pullback. And if you remember what I said in the trading room over the weekend, I said, if you came out of a coma and the first thing I did was show you this stock chart on this day, if you knew anything about charting, you'd say, that looks like a great entry. We didn't know that the tariff news was going to come out over the weekend. We didn't know. But we did know is charting, and we follow charting, and it told us to already be looking for that bounce, and sure enough, we got it today. We have a little bit of overhead resistance up here, maybe at what's called 59.70, and then it's all-time highs for our next point of resistance. Crazy to think we are getting very close, about 4% away from all-time highs on the S&P. So this is telling me to stay bullish and be bullish. Here's a heat map. Everything's green, so it doesn't really tell us anything. We're to +2 still. People could say, Rob, why haven't you gone to a +3? Well, this line isn't very steep. This 50-day moving average, you could be to +3, +2, +3. It doesn't really matter. You are overly bullish at this point on the scoring system. Let's talk about a few potential trades here. I'm going to first focus on Carvana. The high base pattern is my favorite pattern in trading. It's my favorite pattern. It tells me that this thing is so strong, it literally just made a new high and didn't come down, didn't pull back. We just based here. We're now breaking out of the top of that base. 320 is an easy target here. Again, that's $8. It's on a $310 stock. Is hardly asking it to go up much. I think a 310, 320 vertical spread here. You could go further. You could go to 330. You could go to 340 if you wanted. But I don't think it's necessary. I'm looking at the 310 to the 320 on Carvana. Next up, Zscaler and another high base. This one is just beautiful. I mean, look at this. Look at this thing. It climbs and climbs and climbs, and then it high bases for 5-6 days. It climbs and climbs again, moves sideways. Here we are, moving out. Yes, we would have loved to see a green candle here, but that's okay. 260 is a very easy target here. If it's got $5 strikes, the 250, 260 vertical spread. If you want to be a little bit more theta and less delta, then I'd take a look at the 250, 260. And if you want to be really aggressive, long calls. Long calls are about as aggressive you can get. And look, we're in a +2, +3 market. We've got a +3 looking stock. This is when you do want to take shots if your trading plan allows for it. On the downside, this is Sweet Green. Sweet Green is a restaurant company that was a darling about 6 months ago and now can't do anything right. And to me, it looks like is possibly coming down to, I don't want to say bankruptcy because I haven't even looked into this stock, but the chart is telling me nobody wants to be in this thing. Nobody wants to stay in it. And look, even after we drop, what do? We base. We're not even strong enough to have a bounce off of really nasty selling. This tells me it wants to go lower. I'm looking down to $12. I'm looking at a 12, 13 put spread. That's going to get you, probably cost you about 40, 45 cents. You got 50, 55 cents of upside. Decent risk reward on this one. Let's talk about tomorrow. The pullback is confirmed. So if you were waiting for an opportunity to be bullish, you got it today. You got it. If that was the signal here. Remember, we have no idea what's going to happen tomorrow. We could get a tweet tomorrow that ruins us all. We could get news events that could ruin it all. But we can't live our life in fear as a trader. We just have to trust the charts and trust the trends. And right now, we got a bull pullback. We were about a week ago, I said, hey, I'm not looking to make new trades here. I'm looking to hold off because it's at the top of the wave. We got the pullback, and now the wave is starting again. That means that I'm ready to get back in. I'm ready to actually enter some more bulls, which I did today. I think it looks good here for the next run to the next level. As I said, we have no idea what's going to happen tomorrow. None of you do. I don't. No one knows. It's all just speculation. But this is how you trade. You trust in your charts, you trust in your trends, and then you manage your risk for when they do fail. Because they always will fail at some point. Tomorrow, we got the FOMC minutes, and we have NVIDIA earnings after the bell tomorrow. That should bring some fireworks. So if you're in any sort of semiconductor tech stock, you probably want to be looking at those trades, making sure they are durable during that earnings report. Thanks for joining me. Goodbye, everyone.